You are listening to chartingwealth.com for Tuesday, the 23rd of October, 2018. We see stocks mixed for the day. The S&P 500 is down. The NASDAQ 100 is up. We see 20-year bonds down and gold down. So the only thing up for the day is the Qs. Let's jump first, as we always do, into SPY, the S&P 500 index. What do we see? Well, we start the week off with a red down candle forming. Again, just the first day of a 5-day weekly candle. We see the derivative oscillator gaining downward momentum, that price percent oscillator heading down, and the S&P down 0.43%. Price movements below the 2-day and the weekly trend line. We go to the 2-day. What do we see there? We see derivative oscillator losing some downward momentum. Price percent oscillator still heading down. First day of this latest 2-day candle is, of course, a red down candle. It's just the first day of it, so we'll see how it completes tomorrow. What's going on that 4-hour chart? Hasn't crossed over, going down, looks like. If the derivative oscillator has anything to do with it, continuing to lose momentum. So perhaps over the course of the day, maybe on Tuesday, we'll see a crossover going down. Again, down movement in the morning and afternoon, but that trigger has not been pulled yet. Let's just see what happens. We will continue to watch patiently. We go from the weekly now on the S&P to the weekly on the Qs. Q's up for the day, 0.52%, but our Heikin-Ashi candlesticks are telling us the average pace is down. It's drawing a red candle even with that up movement. We see the derivative oscillator gaining downward momentum. Price percent oscillator heading down on that weekly chart. Want to know more about Heikin-Ashi candlesticks? We have a great training. We'll attach that at the end of today's program so you can study it. About 90,000, maybe 100,000 now folks have taken that study for free. We see the derivative oscillator losing downward momentum. The price percent oscillator not heading down at the same prior angle it had been on Friday. Loosened up a little bit. Price movement is below the 2-day and the weekly. Now we go in for the deep dive. What do we see on that 4-hour chart? A spinning top and pretty much a doji at the end of the day, even though it was an up day. That last down candle on the day on Friday totally encapsulated that up movement. Derivative oscillator still losing downward momentum. Price percent oscillator heading up, but if the derivative oscillator has anything to do with it, maybe on Tuesday we'll see a crossover going down. We'll watch. Remember, we're trend followers, and the trend on the S&P and the Qs is decidedly down on the weekly and the 2-day, and we'll wait and see if we have a down move. Now remember, if you do pull the trigger on a practice trade, you can try PSQ, which is the short fund for the QQQ, and if you're looking at the S&P 500, you can check out SH. Remember, it moves in the opposite direction of the S&P 500, just like PSQ moves in the opposite direction of the NASDAQ 100. Again, listen to our training we'll put at the end of this program today. Also, inverse funds, how to make money when markets crash. Now, going to 20-year bonds, of course, they also have a crossover going down on the 2-day and the weekly. And of course, we see that the weekly chart, let's go to that first, not the 4-hour. We have a crossover, of course, on the weekly and the 2-day. We're forming a red down candle after that prior week's green up candle. Derivative oscillator losing some downward momentum. Price percent oscillator heading down. We go to the 2-day chart. We see really a sideways slide, don't we? But tending down, price movements below that 2-day trend line just barely. And again, just the first day of the latest 2-day, still heading down. Derivative oscillator, however, is losing downward momentum. What do we see on that 4-hour chart? 4-hour chart at the end of the day is trying to cross over going down. So you might look at how things are in the morning, and you might have a jumping in point perhaps tomorrow afternoon, or if you want to really check things out closely and see what things look like around 10:30 after the market settles out, and see if TLT is still seriously heading down. You could have a potential jumping in point with that crossover after the pullback. So we go from TLT 20-year bonds lastly to gold. Remember, gold had that weekly vertical crossover going up back on the 5th. Derivative oscillator continuing to gain upward momentum. Price percent oscillator has not at the same strong momentum it had been the prior week, but still going up. We have a red open box candle, which tells us that, again, some weakness there in gold. We dive a little deeper into the 2-day, and that's where you can see things leveling out. We see the derivative oscillator losing momentum, price percent oscillator going flatter, and a red spinning top the first day of this latest 2-day candle after we breached on the Friday close of the 2-day chart that 2-day trend line. So that's not a good sign for gold. What do we tell you to watch for? Of course, over the last few days was that pullback. We thought that would be coming. It did come. So we see the derivative oscillator gaining downward momentum, price percent oscillator. We had a nice opportunity for a jump in on that short run up on gold. We'll wait for things to settle out. And again, if gold crosses back over going up and the 2-day and the weekly are in the same direction after this pullback, we'll be ready to ride on more up movement on gold. Folks, that's where we are as we end the day on Tuesday the 23rd. We so appreciate you being with us. We're here for you every single day. If you want to help us out, purchase the book. There'll be a link there also at the end of the program, a little video there. Plus, you can always see in our show notes the information you need to buy our book, Charting Your Way to Wealth. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.